Happy Thursday, team. It's late in the day, and I'm getting ready for a vacation. Today was a big day just in the office, and we're about to go out. My brother just turned 40 yesterday. So tomorrow, Friday, we're going to be out golfing and have a good time with a couple of friends. But in the meantime, let's get you guys caught up on what's going on and what's important in the mortgage world. Really quick, and I think this will be interesting to some of you guys. It was interesting to me. The rates, okay, that's not as interesting as I was just alluding to, but rates actually still flat, right? Still about the same 5.1 it was last week. That's always good. 0.8 points. So technically a touch lower. So that's always fun. Here's what I thought was interesting. 30-year is rising a little bit. And you guys can see just, January, February, March, April, May, right? How rates have just shot up over these last 5 months. That's no surprise. They've started leveling out and, kind of here's where they are. They go up, they go down, things like that. So that's all fine. But what happens is what we've started to see is a lot more folks are interested in ARMs. And I started doing some research and I found that apparently ARMs are only like 0.6 or 2%, I should say, up only 0.6 from a year earlier. So not many folks are asking for ARMs. And a big part of that is just the way the market is right now. A lot of the ARM options aren't, they're not like super attractive just because of how the yield curves are playing out. But more just kind of as a reference, what's interesting is if you guys look at this, and by the way, side note, we're going to compare bubble mortgage meltdown days to today and how that looks. Well, today only about 2% of the mortgages are ARMs, whereas back then, again, 2.1% in March, and back then 2%, was more 13%, down 13% from the 620 credit score. So if you guys look, and I won't read you, but I will, about 2% of the mortgages today are made with credit scores below 620. And back then it was 13%. And then this chart, which I think is really cool, the gray is 30-year fixed mortgages. So you can see, this is the year 2000 to 2022. You can see what percentage of mortgages made are 30-year fixed in gray. So right now that's about 80%. When rates were really crazy low, here we are at 80, 80, 90%. And look at the ARMs. And then you got 15-year and others. But the ARMs back here, look at this. About 50% of the market was ARMs back leading up to the mortgage meltdown. That's this bronze color here. So what's crazy is 50% of the market was ARMs back then. And a lot of those, remember, they were ARMs because they were subprime loans. Subprime loans, most of them were like 2-year ARMs. Well, check it out today, just a wee little bit. Right. So you can see how there's no ARMs that happened during COVID when the rates were in the 2s and 3s. You get a little more coming up, but I don't know. I thought that was fascinating and cool. Upcoming events, guys, this is going to be a great workshop. At least I hope it will be. I'm working on it, still putting it all together, but we've had a lot of inquiries over the last 6 to 8 weeks about appraisals, some coming in, low, and it's not necessarily that that's a new thing, but in this market, the deals are starting to become more and more precious to where those low values now need to be justified, and so that the buyers don't walk, because a lot of folks think that the market's cooling off. I don't see it, but just so you guys know, we're going to teach you how to read an appraisal like a lender. So when we rebut or when we contest the values, again, we want it to be accurate. So we're not saying you can change the value just because you want to, but it's how do you read it like a lender so that you guys can challenge these appraisals if you think they're inaccurate or incorrect or not using good data. We're going to go through a couple of different appraisal examples in the office. I'll be teaching the class. Love to have you join. Please, forward share, tell your friends, come on in. So love to see you. And again, thank you as always, guys, for watching. Thanks for joining us and hope you guys have a great Friday, and call the office tomorrow. And if you need anything from the team, they'll take great care of you. Have a good weekend. Bye-bye.